7 signs of Australia's property market FOMO. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. Grab your stein of coffee or your hashtag not sponsored $1 coffee and let's have a look at this article from realestate.com.au. Now it's titled 7 Signs the Australian Property Market is Going Gangbusters Right Now, written by Christine Craze. So, let's pull this apart a little bit when we go through it. 7 signs the property sector is going gangbusters. Or could it be 7 signs that we're facing fear of missing out and people are just piling into the sector? I was talking to a mortgage broker mate yesterday and he was telling me how housing's just going crazy. It is. You know, getting a lot of people that are borrowing money, make hay while the sun shines. But there are others who are just selling all of their apartments, getting out of their investment-grade stock. And one thing, I feel sorry for the mortgage brokers, to be honest, because the banks, with all the, the Royal Commission and all the loosening of lending restrictions, the banks can pretty much just sign you up willy-nilly, where the brokers have to do all this work and be quite onerous to make sure you can pay or service the loans. The banks don't have to, they don't care. Where the brokers, well, they're kind of stuck between a rock and a hard place. Who are you going to go to if you just want the money? You want the money. Who are you going to go to? The place that can give you a yes or no answer in an instant, or someone that's going to take weeks to get back to you? It all falls into place, doesn't it? How the banks get their perks, the politicians get their property bubble. Maybe I'm just becoming more and more cynical the older I get. Well, I am approaching 40, everyone. So let's have a look. Where are the next $3 million suburbs? Aussies have always loved bricks and mortar, but throw in a global pandemic, a ban on international holidays, and a lockdown induced desire for more space, and it's no wonder housing has become a very hot commodity. And a entire sector of the economy that's been completely juiced up by government intervention and a cash rate that is insane. So I wonder how many people out there are worried about we're just going to get hyperinflation. And sure, people will invest in Bitcoin. People will invest in precious metals. But here in Australia, how many people are going in property? If your money's going to be worthless, put a chunk of it in your property. At least you can use it. That's the advantage. When COVID-19 arrived down under a year ago, the doomsayers declared that real estate prices would fall off a cliff, with predictions of a 30% crash. Those property pessimists couldn't have been more wrong. Well, that was the banks, everyone. We saw that. We saw the CBA. We even saw the RBA, the Reserve Bank of Australia, predicting a 40% fall. It wasn't just pessimists. It wasn't perma-bears, everyone. The problem with our property sector, fundamentally, here in Australia, we are so obsessed with property. And if you can buy a property and it can go up in multiples of a yearly average income. And, let's have a look. We'll look here. ABS. ABS.gov. There you go. $1,700 a week is average earnings. That's all over the place. Median's about $1,100, we'll say. 50. Wait, I'm not even showing it to you. Here we go. Median's about $1,100. 55 grand a week, let's just say. Give or take. A year. So if you can invest in property, sit there and make 3 or 4 times that in 1 year, what are you going to do? Are you going to start a business? All the hassle, the stress, the paperwork, the bureaucracy, dealing with this department, dealing with that. And then you've got now all the social justice risk that's thrown on top of it if you're a business person and don't toe the line. Just buy a property. And then what does that happen when you have generations that do that? Everyone can't be a landlord. You need to actually have some productive parts of the economy that also add to it. We can't all be landlords and politicians. That's what I find quite funny. We've got a local Greens councillor here that's talking about landlords being just rent seekers, in the derogatory sense, when he's a politician. I thought it was quite funny, quite ironic. So, soaring house prices in almost every corner of the country. Buyers overwhelmed with FOMO. That's the thing, and that's the media. People are afraid they're going to miss out. People want to get into property. They want the stability. They don't want to deal with a landlord. They don't want to deal with a real estate agent. You go to rent a place, you've got to compete with 20 or 30 people. You've got to jump through all these hoops. I mean, we're renting a place now. The downpipes aren't even attached to the roof. They're not going to repair anything. The stairs are wonky, which, I mean, it's an investment property. What do you expect? They just want it for the money. You know, you're not going to put thousands of dollars into it. You should, really, to maintain your asset, but we'll see. So I can understand why people want to get into property. It's an obsession here in Australia, everyone. It's higher than 40. There's not enough stock on the shelves, and banks are practically giving money away, has led to one of the speediest post-recession recoveries Australia has ever seen. Now, this is the question. Is this an actual recovery, or is it just juicing up of the market? Is it the dead cat bounce? You know, when you got a market going up, going down, and then boom, up, and then down again. How many people do you think are thinking, okay, we're gonna buy this house, you know, young couple, we can service it, it's fine. But how many people haven't actually lived through an interest rate rise? When was the last one? Look, 2010, when they started lifting them up? How many people wouldn't even remember that? Weren't even looking at buying a property. They only know rates going down. So what happens if in a few years' time we've got some Reserve Bank, and you know, we saw it in the Royal Bank of Canada, where their CEO is predicting an increase in interest rates in probably next year. So what if it doesn't happen next year or the year after? Maybe it happens in 3 years, like good old Lowe was saying. Then you suddenly go from 1.99% up to 4%, or up to 5%, or up to 7%. How's that going to be possible for a lot of people to buy a house? I mean, I'm not worried if it goes that, but I bought before this insanity, and I bought a dump that, you know, didn't cost me an insane amount. I thought it was expensive at the time, but now what I'm seeing, what some people are paying. So that's the thing, and that's what I'm being told by people, that you're having people run out, borrow money, buy these places, and they're not planning ahead. Now, if you go to a broker's probably going to have to do quite a rigorous process. A bank, they're not going to care. Come on. Do you really think they're going to care, guys? So let's have a look at the 7 signs that the boom is here and looks certain to stay for some time yet. Okay, let's see what Kirsten is saying. Sorry, I got a name wrong. Kirsten. I should know Kirsten. Home values are rising at lightning speed. Okay, they're rising at lightning speed. If we jump over here, let's have a look at the asking price on SQM. We can see, well, there you go. 3-bedroom houses in Sydney. Yeah, the asking prices have shot up to 2.2 million. Look at that. From 1.4 up to 2.7. That's just nuts. Even this one. Units have shot up again. Units, everyone. Who would buy a unit in Sydney with all the construction issues? Let's look at Melbourne. Let's look at the asking prices here. There you go. Oh, it's up, down, but generally trending up ever so slowly. Look at all houses from 2019. Let's look at Brisbane. Same thing. Look at the top there. 3-bedders. Up. Where all houses have kind of crept back down again, or in line with 2-bed units. There you go. That's interesting. So, Gold Coast Cottage earned a $340,000 profit in 6 months. Yeah, where is it? I mean, you're not buying that house, okay? You're not paying that much for that house, and that's the profit. You're buying the land on the Gold Coast, okay? It's the land. Little fibro shack, okay, there's, it's probably fine, perfectly comfortable to live in. That's all you need. No side access, a little bit. I've seen a lot worse. So, spurred on by the perfect storm of record low mortgage rates, improving economic conditions. Okay, we can't really say economic conditions are improving, guys, because we're still on life support. I'd say a flood of government stimulus. Oh, there we go. Government handouts and low supply levels. See, this is an interesting thing because we're seeing other articles where they're predicting people will be planning to sell in the next 5 years. But if you were to sell now and you made good money, you still have to find somewhere to live, unless it's an investment property. And the investors that have bought all those units, how are they doing? So Australia's housing market has seen values rise at the fastest rate in 17 years. CoreLogic is calling it the broad-based boom. After crunching the numbers and declaring that dwelling values surged 2.1% in February, the largest month-on-month change recorded since 2003. The last time we saw a sustained period where every capital city and rest of state region was rising in value was mid-2009 and early 2010, said CoreLogic's research director, Tim Lawless. Okay, so we're just seeing it going rampant. Is that a sign of a light speed, of a insane economy, or just FOMO, or the fact that we've got a green change? Clearance rates are skyrocketing. Now, I've looked at this thanks to some of the team over at Fresh Canvas. One of the articles so far the only article I've written. I've got a new one I'm writing. So I'm trying to get some written articles for my posts here, guys. Give me time. Auction clearance rates, there's quite a margin in them. They will show a trend. Don't believe the actual number. You can see the variance. So they're advertised at 74% clearance rate. In this example, it could be anywhere between 60% and 79%. That's the range. They don't tell you the range in the stats. They only tell you they know there's some inaccuracy in it, but they're only interested in the trend. And they could actually give you accurate rates, because rather than depending on what agents tell them, in a database of properties, they can see if a property hasn't sold at auction, if it's for sale the next day normally. So, auction action is frenzied, even in cities where they aren't usually in favour, such as Brisbane, Adelaide and Perth. For the week ending March 7, CoreLogic recorded Sydney's auction clearance rate at 86.7, up from 75.2 in the same week. I want to know what the range is. To put that into perspective, Sydney's clearance rate has averaged 65% over the past decade. Okay, so that could just be a sign of low supply. I mean, we had an example. I remember I used to look at the clearance rates every week when I was first getting into this. And Tassie, Hobart, 100% clearance. It didn't make headlines. There's only one auction. Melbourne saw 80.9% of homes sell under the hammer. Anyway, for non-traditional markets, Brisbane recorded 82.3% compared with 42.5%. Okay, that just means there's some activity in it. So people are buying without kicking the tires first. Now, I'm going to do a video on how this can really backfire. So, a glamorous home on Brisbane River earned someone an incredible $500,000 profit despite them never actually owning the property. Well, this isn't the property. This is a render, isn't it? That has to be a render. I'm looking at that. Those plants don't quite look real enough, do they? Anyway, more than ever before, purchasers have been virtually viewing homes and making multi-million-dollar offers without even setting foot in the property. I mean, that's just... I don't understand why you do that. I guess there's some people that just have that much money that can do it. According to a recent survey by the Real Estate Buyers Agent Association and Property Talk Australia, 30% of buyers said they would buy without physically inspecting a property. It's alarming to think that people are basing their biggest financial investment decision they're likely to make in a lifetime on a video and a few photographs that may or may not be showcasing the property's flaws. The REBAA President Kate Baker said, well, yes, that's it. Yeah. Homes are turning huge profits in just months. I mean, this is a level... To me, this seems insane. It seems utterly insane buying a property without actually seeing it. Am I just old-fashioned, guys, or is it just my professional experience making me so untrustworthy? Is that what it is? It could be. It could be. I mean, is this the new norm, guys? You know, I'm evolving into boomer mode. That's it. You know, once you hit 40, you officially become a boomer. That's how it works. That's it. Look forward to it. National property prices are rising at such a fast pace. Some homes have been flipped in a matter of months for eye-watering profits. One Gold Coast cottage earned a $340 profit in just 6 months. The modest, unrenovated 3-bedroom house was purchased for $1.3 in September 2020, but recently exchanged for $1.69. I mean, good on the investor for doing that. Good on him. You know, great. Good work. But is that normal, or is that a sign of an overheating market? In the Sydney suburb of Cherrybrook, a seller pocketed a tidy $480 profit, also in just 6 months. The house he bought in September for 1.9 after a minor renovation sold for a new suburb record of 2.38. And a landmark riverfront home in Brisbane has fetched an incredible $500,000 profit for a would-be buyer who never actually owned the listing. The 8-bedroom Balham sold in late 2020 for $9 million. However, in an unusual twist, the buyer decided to on-sell his option for the property to another party before settlement for $909.5. Well, I mean, these are rare circumstances, guys. Can you do this all the time? Is that a sign of a overheating market, or just some cherry-picked properties that sound cool? I mean, we saw another example of an auction where, you know, they make this whole story up. I mean, this is... Well, they don't make the story up. They generate a story to really get you involved and get you excited. And the people are proudly there saying they've paid $100,000 above reserve. So once it was a badge of honor for suburbs to have a $1 million median, but that once impressive price tag is pretty run-of-the-mill these days. And our median income is about $55,000 a year, everyone. Just think about that. Australia, the lucky country, hey? I get the feeling that the divide, the haves and haves not divide here in Australia is just growing more and more. Realestate.com.au chief economist Nerida Conisbee said the number of suburbs with medians over 3 million doubled during the pandemic, and more than half of the 30 suburbs on the list experienced double-digit price growth. And there is no signs the top end of the market will slow down any time soon. Ms. Conisbee predicted the number of $3 million plus suburbs is set to double again to 60 during 2021. Although most of the $3 million club is in Sydney, Bar Beach in Newcastle, Forest in Canberra, and Portsea outside of Melbourne are ones to watch this year. Way less bang for your buck in cheaper cities. Okay. So here's an Adelaide home. It looks like it needs a bit of repair work, but you can get some lovely... The unique thing with Adelaide is you've got the houses where it's all stone everywhere and they've got the brick at the corners because the brick was more expensive than the stonework. Adelaide was always one of Australia's most affordable capitals with a modest median house price of just $450 just 12 months ago that it's now jumped to $509. Since the pandemic began, several Adelaide homes have seen huge sales prices over their set reserve at auction. A 2-bedroom house in West Lakes recently attracted 36 bidders and sold for $1.47 million, $525 above the reserve. Meanwhile, a humble home in need of renovation in Glenunga drew a 500-strong crowd, and 50 registered bidders to sell for $2 million, despite an asking price of $1.3. Okay. Wow. And Hobart, which was long considered Australia's cheapest capital, has seen prices soar. CoreLogic's latest data revealed the Hobart house price grew by 2.5% in February and 8.7% in the past year to $535,000. That's higher than Adelaide, Perth and Darwin. If we look at Hobart's growth rate over a 5-year period, we can see that house values have risen about 52% over the 5 years, Mr. Lawless said. People are camping out to get first dibs on land. Well, yeah, we saw that. We did a video on that. I made the comment that this, setup here would be $15,000, and no, apparently it's more like $50,000 to $70,000 every month. I'm so out of date, guys. I'm just so bloody hell. You could live in that. Look at it. FOMO, or fear of missing out, has become so serious in some suburbs that keen buyers camped out prior to land release in southwest Sydney. Security was called in February as 40 buyers pitched tent outside the developer's office for 4 days. 4 days to buy land. That maybe if they used to give land away for free. You'd have land that you could homestead, and then you'd have to camp. Now you're camping just to buy in Western Sydney. What is going on in this country, guys? This is bad. This is not good. Okay? This is bad. Terrible. So there are the 7 signs, everyone. What do you reckon about her 7 signs? What do you think Kirsten's on about here? You know, so you've got... Well, let's have a look at them all. Let's have a look at them. Property prices are surging for houses and areas. Apartments aren't. But access to money is at record levels. Clearance rates are skyrocketing. Well, supply is low. That's driving up, and that's always a trend. It's not they don't show you the range. People are buying without seeing the property. That's just insane. I don't understand it. I do not understand that at all. But I guess that always happens. Homes are turning huge profits in just months. These are just, I think, cherry-picked examples. Same thing with, $3 million suburbs. That's just inflation. Guys, isn't that what the RBA want? Oh, wait, they won't measure it. They won't measure it properly, will it? That's the problem with CPI, guys. And cheaper cities are going up. Well, this is the thing. You see Sydney and Melbourne shoot up, and then they level off, and then people sell out there and move to other cities where they can get a more affordable quality of life. Hopefully, they'll sell out in Sydney. And that's the challenge, everyone. I was talking to someone the other day, and they had friends move up to Brisbane from Sydney, and they were saying, it's no different. It's not affordable here. What's going on? It's meant to be cheaper in Brisbane. Brisbane's getting silly. The closer you get, the more expensive properties get. And you're buying these tiny little 400-meter blocks where you're pretty much crammed right to each other, and they maximize the property on the whole. You don't even have a backyard. People are camping out. That's just... I mean, I like camping. Don't get me wrong. I like camping. I'm jealous of this type of setup. I would love something like this. Maybe when the kids return, or maybe Rachel and I should just get this and cram the kids in a tent when they're a bit older, but they're all a bit young right now. So there we have it, everyone. Several signs of Australia's, well, as I'm calling it, property market FOMO. What do you reckon? Let me know your thoughts and opinions and your take on this article in the comments down below. Thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy merch from Heiser Says, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time. Bye for now.